Everyone talks about the Sioux Falls housing market like it's one big hot market that buyers need to move quickly because homes are selling fast. But when you actually look at the data, that's not the full story. In the Sioux Falls housing market, there are 5 layers that go into what's actually going on here in our market, and I'm going to be covering them today in our video. Each one of those layers could actually change your strategy completely as a buyer. That's why I don't want buyers to be following the headlines or following what everyone else is saying. We want to actually look at the numbers. So you'll want to check out my free market data report that'll be linked in the description below. Go grab that and you can follow along with the video as we go. After helping over 300 families buy, sell, and invest here in the Sioux Falls area and analyzing recently over 2,000 transactions, I've got the data that can really make these points and help you understand what's really going on here in the Sioux Falls market. We're going to jump into layer number 1, which is school boundaries. Now we're going to be focusing on the high school boundaries for this data set, but we're talking about the Roosevelt and Jefferson school districts, which are on the west side of town, and the Lincoln and Washington school districts, which are on the east side of town. Now, of course, families are going to check out schools and check the ratings and ask around about the best school districts, and that's super important. But it also could be important to know that those different areas could be a difference in being able to negotiate and how quickly a home sells. So let's jump into the numbers. In the Roosevelt and Jefferson school boundaries, the median home price is currently sitting around $330,000. Now, Lincoln and Washington boundaries are right around that $264,000. Now that's a $66,000 difference between the east side and the west side. Now, of course, there's going to be a difference in quality and condition and age of home. When we look at that east side pocket, there's definitely a bigger majority of older homes that are in that district than there are on the west side. So that comes into play a little bit, but $66,000 is a big difference in that median price. Another stat that's worth taking a look at is actually what percentage of list price these homes are getting when they do hit the market. So on that west side, the Roosevelt and Jefferson homes are selling at 99.2% of asking price, whereas Lincoln and Washington homes on the east side are only getting about 97.8% of asking price. That's a 1.4% difference, and it could make a difference in your negotiating power. The problem is most buyers find this out after they're already emotionally invested in the home, whereas the smart buyers know this data and can make an educated decision before they write the offer. So on a $330,000 home, that equals about $4,600 less in negotiating power. Now, is that important for you to know? Of course. Maybe it won't make a big difference in the different area, and maybe the school district is more important, but knowing the data is really important for you making a good decision. So if school district doesn't matter, you may want to take a look at the side of town that you'd like to live on. Layer number 2 is neighborhood pockets. So I pulled data on different parts of the city, which should really be a data set that people look at because there's a big difference in certain pockets of Sioux Falls. So let's actually take a look at the numbers because I looked at the northeast corridor of Sioux Falls and the southwest side, and there is about a 3 times difference in days on market between the east and the southwest. So the northeast side of Sioux Falls is actually hovering right around 209 days on market versus our southwest side of town is sitting around 61 days. That is a 3 times difference between the two different areas. So it can make a huge difference in the amount of inventory, the days on market, how much negotiating power you have as a buyer. So knowing those stats is pretty darn important. The other areas I want to discuss are 57105, which is the central, near the south side of Sioux Falls. The average days on market there are 68 days, and our median price there is about $290,000. We're going to compare that to the northwest, which is 57107, and the average days on market there are 107 days with a median price of $356,250. I know that is a weird comparison, but those two different areas are operating completely different. And the difference between 57105 and 57107 are $66,000 and 39 days longer on market. So we're definitely seeing an interesting trend. That southwest side of Sioux Falls is moving quicker and has a higher price point. Northwest Sioux Falls has more inventory that's sitting on the market longer, but a higher price point, versus our northeast pocket, which houses are sitting on the market longer and have a higher price point. So there's a lot of different neighborhood pockets that are operating differently in today's market. I know that's a lot of data to absorb, but here's the kicker. Over 45% of homes in all of Sioux Falls sold within 60 days, and 27% sat on the market for over 91 days. That means almost 1/3 of the market sat on the market for over 3 months. That is an interesting stat. So overall, you should know that you're not shopping in the whole of the Sioux Falls market and having the same experience. There are different neighborhood pockets that are going to feel more competitive with less inventory and lower days on market. And there's going to be pockets where there's a lot more negotiating room because homes are sitting there longer. So having an educated agent who can tell you about the different neighborhoods and what they're seeing is really important. And knowing the numbers is really important. I want to point out that for families, these stats also matter, because if you're juggling a busy household, thinking about putting your house on the market, knowing the average days on market and planning ahead for that so you have realistic expectations is pretty important. So not only is this data important for you as a buyer, but it's also important to set realistic expectations as a seller so that you're prepared and know how the market is functioning in your particular neighborhood pocket. I've actually recently seen this play out with my actual clients. I had one client who was listing on the southwest side of Sioux Falls in the same price range as a client listing in the northeast side of Sioux Falls. Now, they're exactly the same price range, similar home types, but the market functioned completely different. So that southwest home went under contract really quickly, within a couple of weeks, versus my northeast side home actually took a couple more months to go under contract. We were prepared with professional photos, marketing, the same techniques that we use for both properties, but we definitely saw a difference in how the market reacted. So planning ahead and setting those expectations up front, my clients knew what to expect going into it and came out on the other side happy with the end results, but they were completely different. But I've got some information that's even more surprising that I'm going to jump in next. Most people are avoiding new construction because they figure that new construction is actually more expensive than the existing homes. But this data set that I'm going to jump into is actually going to prove why that isn't always true. So general conversation, people are going to make an assumption that new construction is more expensive, and that initial sticker price might be a bit higher. But that doesn't tell the full story, because builders in Sioux Falls are actually sometimes offering incentives. Now, the incentives can range based on the builder, based on their motivation level, but what we're seeing is that builders are sometimes offering up to 3% of seller concessions, and those seller concessions can be used for anything you want. And one of the main things I'm seeing being a powerful tool is actually a rate buy down. So a 2-1 rate buy down is something that we've been able to negotiate in and has made a big difference in monthly payments. But let's talk about the stats of new construction, because that's where it gets really interesting. New construction listings that took a price cut here in the last couple of months are 48%. It's kind of a big stat. The average price cut is around $19,000, and new constructions have an average days on market currently of about 140 days. Now, take into consideration that some builders are going to put the house on the market when they put the footings in, so they could take a pause and not get vertical right away. So that can sometimes be misleading, but still, 140 days on market is a longer time than the average resale property, because resale properties are sitting currently around 72 days on market. So new construction is actually double the time that a resale property is. So what that indicates to me is that you might have more negotiating power. Now let's circle back to that 2-1 rate buy down, because I want to tell you what the numbers actually say about how big of a difference this could make for someone. Now I want to say that a temporary rate buy down is temporary. You get 2% less in the first year, 1% the next year, and then that third year you're going back up to market value of where you locked in from the beginning. So it can be a really good tool for some people, but maybe not for others. So keep that in mind, talk to your lender, you'll get all the details. But here's what the numbers say. So in year one, you could save about $490 a month because that 2% interest rate difference. In year two, you're looking at about $250 difference in a month. And then your total savings during that 2-year period is right around $8,880. Now, who couldn't do a lot with over $8,000? So it is a great tool to utilize, and that is what's making new construction a little bit more affordable. So jumping into the stats specifically in the $300,000 to $450,000 price range, which is where a lot of buyers are shopping, new construction averages about $32,000 more than a resale home. But it also sits about 87 days longer. So there's a big difference in a new construction home on price. Yes, it's more expensive. Maybe you can offset that with some incentives, but they're also staying on the market 87 days longer, which means there may be a little bit more negotiating room with a new construction than there could be on resale. One thing that I always point out to my buyer clients is that in new construction, negotiation can be a little tricky. So if that builder is building that same exact floor plan multiple times, or maybe they have several in the neighborhood that are for sale, they really don't like to take a price cut on the actual price. So you might be thinking, if it's on the market for longer days on market, shouldn't I be able to get a $5,000 or $10,000 difference off of that purchase price? And the answer is maybe. The better negotiating tool, in my opinion, is actually going after seller concessions, which can be used towards that 2-1 rate buy down. It can offset your closing costs, and it can make that home a lot more affordable. And sometimes that's a little bit more palatable for those new construction contractors, because taking it off the price would mean that they would have to show that and then offer that on the other product that they have. So just a little tip and trick there. The negotiating is there, but it looks a little bit different. Most buyers don't even ask about rate buy downs, incentives, or seller concessions because they assume that new construction is out of reach. And that may not be the case. And yes, the sticker price is going to be higher, but the monthly costs can sometimes surprise you. Now, I'm not saying that new construction is always the best option. It depends on the builder, the location, and your long-term goals. But what I am saying is that looking at the numbers is pretty darn important. So again, check out that link in the description below so you can grab all of the details there that we've already covered. So now this gets even more interesting as I get into layer number 4, which has more to do with actual timing, because there's actually one piece of data here that I'll be talking about that predicts a lot more than buyers actually understand. Most buyers think that the spring market data actually tells them where the market is going, but January actually is the better signal of where the market is headed. So looking back at the data from the beginning of the year can actually be more telling. Getting into the numbers, in January of 2026, the average days on market were actually about 105 days. Now getting into April, it went down to 93 days. That's a 12-day difference in just a matter of a couple of months. But there's actually a bigger number to look at, and that is the pending sales that happened. So in April of 2026, pending sales went up to 863. That's a 120% increase year over year. At the same time, our inventory actually dropped. It dropped 36.8%, and it's down to around 800 homes currently on the market. The monthly supply of homes is another stat that we take a deep look at because it fell from 5.2 months to 2.9 months. Now that's just pure economics of supply and demand. So you can really see where our spring market is headed based on what the numbers are telling us. So a lot of times I hear buyers say that they're going to wait for the spring or summer market to jump in, but in the spring, we always see more buyers, more competition, and those inventory numbers are telling me that there's going to be more competition than we expected going into spring and summer, which are our best seasons here in South Dakota to go out and buy a home, supposedly. So that's why it's really important to really take a look at the market in a month like January. December, January really signals what's coming down the pipe, down into the April, May, June months that are that spring buying season. And that's what smart buyers are doing. They get together with their lender, they get their financing lined up, they figure out what location, what neighborhood they're really interested in, so that when the right home comes available, they're prepared and can move on it before all of the spring rush happens. All that to say, keep an eye on what's actually going on in the market, because if you're looking at October stats to try to make a difference, that is old news, and the market shifts all the time. And that leads right into the deepest layer of market timing, because the homes that you're actually seeing today were decided on probably over 60 days ago. So layer number 5 is the lag time of the market. Because here's one thing to remember, sellers don't make a decision to list their homes overnight. They typically want to start the process by meeting with an agent, prepping their home, getting it staged and ready so it's beautiful. There's a lot that goes into that prep work, so they've probably been thinking about getting their home on the market for the last 30 to 60 days. So we're already working with that lag time. So when you see the current inventory of over 700 homes on the market, those sellers probably made those decisions back in February and March. And the sellers that are deciding to list their home now, we probably won't see that inventory until July, August, maybe after school starts. There definitely is that lag time to consider. But that also means that buyers are working with delayed information, and that can be frustrating for you as a buyer. There's a lot that goes into the buying process as well, but you're more apt to jump into the market right away versus those sellers who are waiting 30 to 60 days. That's why planning ahead really matters so much. Getting your financing in order, talking to a lender, figuring out your must-haves, your ideal location, and getting all of that prepared so that when you really are ready to make a move in this market and the right house pops up, you're ready and you can jump right in. So you're not losing because you're too slow. You're actually losing maybe because you're working with a market that's 60 days behind where you'd like it to be. So knowing all this information gives you the opportunity to move forward with a lot more confidence. And that's what really separates families who are excited and ready for their next home from the ones that are regretting it 2 years later. They actually understood that there are layers to this market. They're not working with just one Sioux Falls real estate market. They're understanding that there are these different 5 layers. The layers that we've discussed were school boundaries, neighborhood pockets and the differences in them, new construction and those seller concessions that could come along with them, seasonal timing, and the natural lag time that actually just happens in our inventory. So knowing all of those things moving forward, you can certainly make a better and more educated decision without listening to the headlines or chasing Zillow, and understanding what's really happening in today's Sioux Falls market. You're going to go into it with way more confidence. When you understand those pieces, you make decisions not based on fear and headlines. You make them based on all of the data and the information so that you can move forward with confidence. Don't forget, I put together all of this market data research in the document linked in the description below. And if you're one of those buyers who doesn't want to miss out on anything that some buyers might, you're going to want to check out the next video that I have linked right here. We're talking about the fact that Sioux Falls actually does have luxury homes, and some of these neighborhoods are appreciating more than any others throughout the Sioux Falls area. So don't miss that video. Thanks for watching this video, and I'll see you in the next one.